before we start considering getting into longs. But going long up at this area, up in this 1850, 1900 area, very, very dangerous. We can see that it's tagged the Vantage Point 18-day predicted moving average approximately 5 times, 6 times, and the one is broken through. So again, this is hardly bullish here. Now, if we break this down by crossover, we can see by Vantage Point the short term has lost its momentum. The medium term cross is still holding to the upside, and the long term cross is still holding. However, we have our predicted MACD and our predicted TSI breaking. They're showing a sell signal, which I would support. I would say that any upward move on gold would be, like the Fed has said, transitory. These commodity prices are going to be somewhat transitory because if the only thing that could drive this higher is if things fully collapse in the Eurozone, and then that'll send people running into gold, but it will also send people running into the US dollar. So again, we've got to be a little cautious there. Gold at these levels, I'm not sure that that's going to continue. Looking at light sweet crude oil, we basically got, we're holding in somewhat of a buy formation, to be perfectly honest. I've advised my own clients that we're primarily in a downtrend on crude oil. Crude oil will follow the equity markets, the S&P 500, basically tick for tick. That is what's going to happen. So if you're trading crude oil right now, I'd say there's a slight upward bias, but it is dependent on the price of equities. This brings us into the S&P 500. Looking at the S&P 500, we're basically flat with a slight upward bias. Our predicted short, medium, and long-term differences here, you can see from Vantage Point, very mixed signal here. Our predicted MACD and predicted TSI, they're suggesting we're still moving higher. Now we are following a very clear weekly pattern here. The equities get hammered on Friday, part of Monday, latter part of Monday, Tuesday, they start gaining a lot of strength, and then they give it all back again on Thursday. So if you're buying the S&P 500, I would be waiting for a pullback, a considerable pullback here. Actually, we've closed the week at 1158. Our key levels 1183, 1178, and 1172. Now we are somewhat, to be perfectly honest, we're potentially at a buy area right now. I wouldn't say that this is going to go much below 1145, 1130 to start the week, and then it's probably going to make another run at this 1183 area. So keep an eye on that. And if you're, like I said, if you're an oil trader, then you on the CFD side or on the futures side, keep an eye on that too, because that's what I can tell you is the S&P 500 and crude oil are leading indicators for each other. This has been apparent for months. Looking at the 10-year Treasury notes, we can see that they're holding firm. We've come down and tagged the main line, but we still remain primarily, this is warning us that we've got a move coming to the downside here. This would be consistent with a rise in the dollar. So again, watch these 10-year Treasury notes to keep an eye on an indication of what's going to happen with those equities and further support dollar long trades. The Canadian dollar currency futures, again, much like I've talked about for weeks, that this is in Canada is certainly not in great shape. They talk about, well, Canada's doing business with people abroad now, not just the U.S. Well, that's not really true. The fact of the matter is they are doing some business with people like India and China and Mexico, but the reality is 80% of our exports and everything is tied to the U.S. by 80%. So whatever's happening in the U.S. is happening in Canada. And respecting the fact that I live in Canada, I can confirm that. So again, there's very little here that's pointing towards a strong Canadian dollar. Canada does not have high gold reserves. They have a lot of crude oil reserves, and we are an oil producer, but that's not enough to keep a nation running here. You need manufacturing, you need these kinds of jobs, and those kind of jobs are no longer in Canada. Excuse me. So what we're looking at here is likely a continued weaker dollar. We can see the predicted MACD and the predicted TSI. Again, just crossing that trigger back to the downside. Triple EMA crosses down also. Predicted short, medium, and long-term differences are still pointing down. My concern to some degree here is that we could be we do have some resistance there, but I'll get into that on the US-Canadian pair. Now, looking at the British pound currency futures, this one here, I think we are becoming somewhat overbought, and we should see a little bit of a bounce here in the British pound currency futures. My own clients, I've spoke about some of the British pound cross pairs, Great Britain CAD, Euro, Great Britain, some of these cross pairs, maybe not a bad idea. And even against the Great Britain, the US pair, potentially a good counter trend buy, but I'll speak to that in a moment. Looking at the Euro FX currency futures, again, this is a big move. You can see this candle on Friday. I think that this is going to stabilize. We're likely to come back up and check the, at least test the 138.53 area, potentially even the 142 area. Again, when we see this, this is a fear type of trade where they're bailing out of euros because of everything they're hearing on the news and et cetera, et cetera. It's really, this is why I've been telling my own clients, be very, very cautious trading the Euro US. To be perfectly honest, it's not one of the better currency pairs to trade in the Forex. Aussie currency futures with equities basically flat, slight upward biased, but you can see that our indicators are rolling over on these currency futures. The predicted MACD, predicted TSI crossing the trigger down to the downside. With the dollar strength, selling commodity currencies is a very good play. And is the Aussie US overvalued at the 104, 106, 107 area? Oh, it certainly is. Because again, this is a tiny, tiny little economy. It's not a reserve currency or any of this kind of foolishness. It's a very small, small economy. And the stronger currency certainly doesn't help it. So we'll see how this one plays out. But again, we want to watch that dollar index very closely. Now, coming into our currency pairs, again, that brings me directly to the Aussie-US currency pair. You can see that it's trying to put a sell signal. 105.64, my view is continue to sell into this level. Stop should be in the 107 area. If we can get back into the 106.60, 106.50, this thing may have a chance of moving higher, but I think it's very, very unlikely. I think that selling this particular currency pair is a good play. British pound, US dollar, we can see we've got some support down here, down in this bottom 157.50 area. My opinion is this is a decent short-term buy. And looking at the way that we're hitting the oversold levels, it's a decent play. And to start the week, I would be looking to potentially buy the pound dollar, in the 157.50, 157.70 area. New Zealand, US, this one was a terrific short trade I talked about last week. We were selling off this 84, 85 level. We've got a sell signal here. A little bit of a concern here is we do have some fairly significant support in the 82 level. So just just be careful of this. And I'm just going to draw this little line right